Well, another day in Joe Biden's economy and another bank failure. And we're learning more about what the Fed in San Francisco knew and didn't know, and certainly what they didn't do about the last big bank failure. And Senator Joe Manchin suddenly has discovered that the Inflation Reduction Act actually is going to do nothing to reduce inflation. In fact, it's probably going to make it worse, as well as making our deficit worse. There's a whole lot going on in the economy. So let's turn to our friend E.J. Antoni, research fellow in economics over at the Mighty Heritage Foundation. E.J., thanks for joining us.
Larry, thank you for having me.
Let's start with the banks. We got another one in trouble. What's this story all about?
So now we're watching First Republic being the next domino to fall. And unfortunately, this is a combination of, this is the result of a combination of factors, not the least of which is the Treasury Secretary, the head of the FDIC, and the chairman of the Federal Reserve having completely inconsistent messaging as far as which banks will be saved, as far as whose deposits are protected and therefore whose aren't. And as a result, we have seen small and mid-sized banks continue to bleed deposits as people transfer their money to the large and so-called systemically important banks that have been guaranteed by the government. Essentially, the government is yet again picking winners and losers.
Why is this even controversial? Everybody should know by now, I'm sure they do know, it's a basic in saving money in America, that the FDIC insurance only covers your deposits up until a certain point. And if you have more money in that bank in your account and the bank fails, sorry, that's just the situation. Now, they breached that promise with Silicon Valley Bank for some inexplicable reason. And that's really what's now opened up the door here, because they're not going to cover deposits over the threshold in other banks?
Larry, you really hit the nail on the head there. We had the rules of the game, and now the government is changing those rules in the middle of the game. And not only that, but even after saying what the new rules are, they then have repeatedly changed them thereafter. In fact, even during Janet Yellen's congressional testimony recently, she was unable to even articulate at that point what the new rules of the game were. So far from any kind of forward guidance, if you will, both bankers, regulators, as well as depositors really have no idea what the rules of the game actually are. And unfortunately, every time the government steps in and decides that they need to bail out another bank, it is coming at taxpayer expense. No matter what the administration says as far as, oh, this is being covered by FDIC or this is being covered by other banks, at the end of the day, you are on the hook for each of these failures.
Yeah, that was I was about to ask you that naive question. It's like, where's this money coming from if it's not coming from the FDIC? And of course, we know where it's coming from. We're going to pay for it. All right, let's move on to what we're now starting to learn about the Fed in San Francisco and their oversight and inaction over Silicon Valley Bank. What is that all about?
Well, it should come as no surprise that the Federal Reserve's report of the situation determines that the Federal Reserve has no liability here, that it's not their fault. It was the fault of regulators. It was the fault of mismanagement. And those two things are absolutely true. However, the Federal Reserve deserves a tremendous amount of blame here because they were the ones who created this massive and systemic interest rate risk in the banking system in the first place. And without that systemic risk, SVB's collapse never would have happened in the first place.
I know that this is, again, another naive question. The FDIC the Federal Reserve in San Francisco conducted their own investigation into themselves on whether they did anything wrong. Shouldn't there be an independent investigation, EJ?
Well, I think that's a very, very good point, Larry. And unfortunately, this is just like when we saw in the global financial crisis, when the regulators looked back on themselves to try to figure out who was to blame. And shock of shocks, they themselves, of course, were not to blame. They blamed greedy corporations, greedy banks. They blamed the credit rating agencies, of course, but not themselves and not their own failed policies.
Let's get into some of the nuances of that gargantuan Inflation Reduction Act, which of course nobody really read. And the second they passed it, they would never refer to it that way again. They called it some climate change, New Green Deal sort of act. But we're now learning about some of these subsidies in here, including an uncapped tax credit. Goldman Sachs has done some analysis, according to the Wall Street Journal, and it's going to cost 3 times what Democrats originally claimed. First of all, what are these uncapped tax credits, EJ? Do you know?
So this has to do a lot with improving efficiency, and that could be anything from vehicles to efficiency in terms of energy use in your home. This is very, very broad. It's wide open, and it's part of the reason why the CBO, when they recently rescored the budget, the spending from the so-called Inflation Reduction Act is now an extra $300 billion above its previous baseline. In other words, this is costing taxpayers far more than the politicians told you it was going to when they passed it.
Senator Joe Manchin was one of the critical Democrat votes to allow the Inflation Reduction Act to move forward in the Senate. And now he's come out recently and he said, I had no idea this thing had so much in it. I can't believe it's not going to reduce inflation. I can't believe we're not doing what we told the American people they were going to do. I don't know, EJ, maybe he should have watched the segment you did with me the week before they voted on it, because everybody was telling Joe Manchin what was going to happen.
Larry, again, that's another great point. Senator, what on earth did you think was going to be in there when you didn't even read the bill? How on earth could you possibly think that it was going to reduce inflation when you had not yourself gone through the text of that piece of legislation? I mean, it's just absolutely mind-boggling that he should be shocked and surprised right now to find out what's in it, that the Democrats, who all along said they wanted these green energy boondoggles, managed to shoehorn them into this piece of legislation. Shame on Joe Manchin for being shocked about this. He should have known better.
Yeah, and now it's time for the voters of West Virginia to actually shame Joe Manchin as well, as he's going to be up for re-election. I asked Jim Jordan from the Judiciary Committee about this a little earlier in the program in terms of the legalities of it and the fundamental fairness. I'd like to ask you about the economic impact, and this has to do with the Biden administration's plan to charge additional fees on top of the already list of fees that mortgage holders pay right now on a monthly basis. And let's be clear again, these fees are to go to those people who hold mortgages that have good credit, that have done all the right things, that have spent years building up good credit so they can get a nice rate and get that mortgage so that they can buy their home. And those fees will then go to subsidize the costs involved with high-risk mortgages for people borrowing who don't have good credit and maybe actually shouldn't have the mortgage that they're trying to get. How is this going to impact not just the mortgage industry, EJ, but also the housing market?
Larry, really, really good question. We are shockingly doing almost exactly what we did in the run-up to the mortgage meltdown in 2006, 7, 8, 9. Because what we are doing here is we're creating basically an incentive for insolvency and a penalty for prudence by saying to people, if you were a responsible borrower, you are now going to have to pay effectively a higher interest rate. But if you were irresponsible and if you have bad credit, congratulations, we're actually going to reduce your interest rate. In other words, you're going to be able to borrow more, you're going to be able to afford a bigger home or a more expensive home. And those, again, who have been responsible are the ones who are stuck paying the tab, and they're going to have to cut back as far as what kind of home they would like to buy, how big, how expensive, etc. And history may not repeat, but it certainly does rhyme. In the run-up to, again, the housing crisis, what we did in an effort to increase minority home ownership is we started dispensing with things like credit scores. And so just like we're doing now, where the credit score does not impact your interest rate nearly as much as it should, back then we said, you know what, your credit score essentially doesn't even matter. We'll give loans to basically anybody who has a pulse, sometimes even people who didn't have a pulse.
Well, and it's all done in the name of equity. Of course, equity is important when you have a mortgage, but not this kind of equity, EJ. And let's not forget, I only have 30 seconds left here, but the people who were mostly impacted by the bank failures in the 2007, 2008 were people of color, Black, Latino, people who shouldn't have had those mortgages in the first place. They then defaulted, they went into bankruptcy, and then their economic future was ruined because of these poor decisions.
Absolutely. And once again, as soon as you begin deviating away from merit, and as soon as you begin to give people things based on immutable characteristics like skin color, for example, and not based on character, what happens is you set those people up to fail. The very people who you're trying to help, you are essentially dooming financially.
Although I don't think they're really trying to help them. They're trying to help their pals in the banks. Although admit it, the use of equity there, what I did with the mortgage, that was good stuff. More to come on O'Connor tonight.